Hey, good morning, everybody. So this is going to be the watch list for Monday, November 18th. And let's go ahead and start with the economic news. So we don't have much going on Monday through Wednesday. The only thing to consider is going to be the home builder confidence and housing starts. One strategy you might want to look at is these home builders are now coming off of their all-time highs. And interest rates are heading upward. So the 10-year bond was below 4%. Now we're at 4.5%. We're probably going to 5%, which means mortgage rates are going up. They are not coming down. So even though the FOMC is lowering interest rates, really the only thing that's going to impact are credit cards, auto loans, personal loans. Okay, so more around the consumer discretionary side of the house, but it has nothing to do with mortgage rates. Mortgage rates are purely driven off of the bond market, and the bond market is sniffing something out that's saying this market rally is too darn good to be true. So therefore, yields are rising, meaning mortgage rates are going up, and as rates go up, you guys kind of know what happens to the housing market. It slows. So could you have somewhat of a pullback in the home buyers index? Definitely a possibility. Something I'm keeping an eye on, maybe for a longer position for a pullback into January. But I want to see what the housing numbers do on Monday and Tuesday before putting on that trade. Austin Goolsbee is the Chicago Fed. He's overly positive, optimistic, just a great guy. He will not instill any fear into the markets. Then we have a couple Fed governors on Wednesday, but the good news is you should be done trading by then. Thursday and Friday are going to be the numbers to watch. We have jobless claims, existing home sales, and then we have on Friday the PMI and overall consumer sentiment. So those are things that we're going to want to watch. As far as the markets go, let's start with SPY. Interestingly enough, remember, I only track my gaps on the daily. I do not do them on the lower time frame. So if I go to the daily time frame on SPY, you'll see that we have this now, what has changed, a still huge gap below. So I'm going to lower that to narrow that gap. So the low of this candle was 583.86. I'm going to take the top of this and make it 583.86. Okay, so my gap has now shrunk a bit, but you'll note that what we did on Friday is we kind of bounced off the top of the gap. So I'm going to go ahead and lock that back in so it will stay on the charts. So we have a gap below, we have a gap above, we had my prior areas of support and resistance. So I'm going to come down to a 1 hour time frame and you'll be able to see this better, that what we did is we've pushed through the level that was very, very strong resistance in the past. Back here, resisting, constantly resisting till we broke above it. And then what did we do? We used it as support and we headed higher to these upper levels. Well, what we have now is we've come down. So we are now going to want to watch how do we react off of these levels that, again, were significant resistance. Can we get back above this and hold and push higher? If we push higher, ironically enough, this gap, the new one that was formed, is my prior area of resistance that turned to support. So everything's lining up at this 590. So we're going to want to watch how do we hold this 586 level, and it's pretty narrow, right? I mean, so right here, we're at 585 to 586. Does this hold to go higher? And if it does, what I would want to see is I would want to see us reclaim the level, retest the level, head higher. Okay? If that doesn't happen, then what I would love to see is us break the level, come down to the gap fill, move back up, and then ultimately head lower to fill the gap. Now, gaps don't always necessarily fill in a single day. So let's take a look at that with QQQ. We had kind of the same thing. I'm going to go back to the daily. We now have a gap above. We had a gap below. Okay, so now we pushed into this gap pretty significantly on Friday. Now, it did not close. It was more than halfway through, and my experience is when we're more than halfway through, it will typically close. So what we're going to want to do now is we're going to want to narrow this gap that is going to be open. So the low of this candle was 494.49. So I'm just going to modify that to 494.49. We'll do it together. There we go. Got it. We're going to lock it in place so I don't accidentally move it around. And now that's going to be the new gap that I'm going to be following come Monday, right? It's kind of where we're bouncing off. You'll see we had an overnight gap. So that exists. Will we push through this and then down to 487? Now, the Qs were definitely much weaker than SPY. So SPY wanted to hover and move higher. Predominantly that was because the financials were so darn strong. But the Qs were just falling. And if you got into a short trade on Friday, you should have done remarkably well. So what I'd still like to see is this gap fill and for us to head lower. So what I'm going to be watching, we're at 497 here on Sunday. So a couple things. I'd love to see us come down and then try to recover back up to the magical 500 number. Or what do we do on the open? Possibly we rip on the open to 500 and then head lower to fill the gap. Those are two scenarios. So you got to remember, supply and demand, these lines will act as resistance or they will act as support. So this will act as an area for us to bounce or to fail lower, retest, and keep going. So we're just going to want to kind of watch what is going on with the overall order flow and momentum of the market. Let's take a look at a couple individual names that I think you'll find intriguing. So pretty much of a heavy sell-off in tech. Let's take a look at Amazon. This, I think, had a lot to do with Jeff Bezos selling some ungodly amount of stock, like $100 billion or $150 billion of Amazon. So Amazon could never get above $200 a share. It finally got above 200. And so that's kind of, again, think about these magical round numbers that once it got through it, it really pushed all the way up to 215. Now, what are we doing? We're coming back down to 200. We do have two gaps on Amazon on the daily. So you will see that we have a gap above and then we have an open gap below. Okay. So the gap below is being formed all the way down here at 194 down to 190. So if we break below 200, what I would watch for is for us to then start to head to fill this gap with good overall support. The other one that's been holding up the market, Mr. Elon Musk with Tesla. You can see on Tesla, we have a really big gap below. I mean, this thing just took off like wildfire after the election. I mean, it's just insane. So what I would be watching for on this one is love to see us come back down and fill this gap at 275 down to 255. And then below that, you know, I still have my overall support at the 210 area. Looking at this on a 1 hour. So why did the sell-off occur on Friday or start to sell off with pressure to the downside? A lot of it was talk about Trump is going to remove the EV tax credit of $7,000 per car sold. And if that is removed, you know, how would that overall impact Tesla? But it ended up, you know, rebounding fairly quickly. So here's my levels that I'd be watching: 313 and then down to 300, a break below 300 down to the 280 mark. So it had some fair weakness and then has regained a little bit of momentum. The other one that's going to be coming up this week we're going to want to watch is NVIDIA. NVIDIA actually has their earnings coming up, and that is going to be on, here we go, Wednesday the 20th. So we got a couple days. You'll note on my chart for NVIDIA that we have a pretty strong trend line, right? That this thing has just been marching up all the way back here from September 6th. So September all the way to, we bounced it in October. We're bouncing it again in Halloween. And then we briefly broke through and then immediately recovered it. So let's take a look at this on a 15-minute time frame. You'll note that it didn't stay below very long. They recovered it, momentum to the upside. What I would want to wait and see is for us to reject this 144, where it was prior resistance here for multiple days that turned into support, or a break of the trend line. Now, you're probably not going to get that break until after they announce earnings. Their earnings keeps going up and up and up. Now, one of their biggest customers is SMCI. So SMCI, if you're not familiar with it, has had a tremendous amount of issues with their accounting practices. And there is, my experience, where there is smoke, there is fire. SMCI at the high was trading all the way up here at $123 a share. It is now down to $18 a share. So I believe they are NVIDIA's second or third largest customers. Hindenburg Research has a short on this position with a price target of 0. Now, would I short this? And it's also in the S&P, if I'm not mistaken, and it's going to get kicked out because of their accounting irregularities and the amount that the overall stock has dropped. So I would not try to short this. I would use this as a proxy that if it's one of NVIDIA's biggest customers, at some point in time, if they become defunct, they are not going to be spending money in NVIDIA. Therefore, as a result, will have to make up that revenue from somebody else, or it will have to come in from a price perspective. So kind of keep SMCI. This has turned into a meme stock, as if you can't tell. It's down 10%, 10%, 10%, and then all of a sudden, easy, right, to go from $17 to $21 on really no volume. So there was no volume on that thing, and it didn't move. So the other one I want to take a look at too is going to be Apple. Apple, we have a pretty well-defined trend line here. I have some resistance at 227 on the higher time frame. So you can see where that came from in the past. And Apple's a little messy, right? It's either hot or it's cold, but you can see we kind of use this 227 as support, support, resistance, resistance, support, support. And then they flushed it. They try to get above it. They break below. They get above it. It breaks below. Now we're on the trend line. So what would I look for with Apple? One, I would look for a break of the trend. So if we break the trend at 224, come down here to their prior pivots, 222. If we start to really fall below this starting point at 220, 219, 220, I'd be going back down to the 215 area. One of the other ones that you could kind of draw a line in the sand on this one that I've talked about multiple times is going to be ExxonMobil. So you'll look, really 120 is your line in the sand that constantly it holds until it doesn't hold. And then once you break below that 120 on increased volume and some overall weakness, I think, again, the oil stocks could push lower. Where would be an ultimate price target for this? Well, the hard part is it keeps finding some overall support right here at this 118 level. But if you can get below 118, I would definitely love to see this push down here to where we're closer into the 116 and then below back down to the 110 area, 108, again, psychological, where are we at? So oil's been a little bit on the tricky side. But something to definitely keep an eye on. If we break below 118, I think you have room down to 116. The other one that's due for a pullback, and I just don't know when it's going to happen, are going to be the bank stocks. So we'll just look at JP Morgan Chase. Again, same exact thing here, since the election. And again, there's nothing that this new administration has said that we're going to do this or we're going to do that. But what the market is banking on is less regulation and less government intervention, where Elon Musk has been put in control of the DOGE, the Department of Government Efficiency Office, to wring $2 trillion out of government spending, which I'm sure he could find that. If anybody. But you'll look, we were in this huge consolidation range here, 222 to 224, broke out insanely higher. What I would like to see on this one is, one, you're going to come back up and you're going to touch and you're going to challenge these prior all-time highs, which are around just a couple bucks away for a fail lower back down to the trend line. And then ultimately, do we start to give up some of this craziness in the financials? That rates are not going down. So Jerome Powell even said that we no longer have to have a high level of conviction in lowering rates next year. And why is that? Because the bond market is doing the work for the FOMC. When mortgage rates go up, remember, inflation, one of the biggest contributors of inflation is housing costs. Housing will not keep escalating when mortgage rates tear higher. Why? Because nobody's selling. And if nobody's selling, nobody's buying. And if there's no buyers and there's no sellers and there's no home appreciation, right? It's like an auction. You got to have a lot of buyers or a lot of sellers. So home values go up exponentially when there's a ton of buyers and there's not a lot of sellers. Home values go down when there's not a lot of buyers and there's a ton of sellers. Mortgage rates going up mean there are going to be less buyers in the market. And then again, the majority of the country is locked in at a mortgage rate below 4%. Most of them are below 3%. So there's no impetus to sell. So I would definitely be watching the banks for a pullback. And when you see the weakness set in, you can definitely play Chase, for a good example, down to 224. So one of the other ones, I think I was asked a question on yesterday and I didn't get around to responding to the email. So let's just do it live here, which is going to be SOFI. So SOFI has also, I would say, been more of a meme stock. So let's take a look at this on a daily basis. And you'll see that this one, again, was trading all the way up here at 28 and then came all the way down to like $5 a share. So with SOFI, I would not be buying this on a breakout higher. What I would be doing is I would want to wait and see, can you get a pullback to these prior highs here before it broke down? So we'll look right about here where you had overall support. It was resistance, broke above it literally for a day and then failed, broke above it for a day and failed, broke above it. It's using it as support. I'd want to see SOFI come back down to $10 a share, right? Again, psychological before I go long. Do not chase this. Look at the MACD on this thing. I mean, this thing is now starting to curl over. They also, let's see what their news is. Again, it's just, they're piling into the banks. They're coming out of technology and they're going into the banks. They have earnings coming up. And so I think you either do one of two things. Wait for the next earnings release, which isn't going to be till February. That's way too long, right? Or wait for a pullback to $10. I don't think it makes sense to chase this thing higher. That's just me. Let's also take a look at this on a weekly basis. You've had a good ramp up. If you want to just say, let's take a fib level, which is going to be from the prior pivot high. And so this was the high all the way down to the pivot low. Look at where we're about to reject is at the 50% level. So if banks get weak, this would be a short that I would take back down to $10. I think it's overdone personally, but that's just me. And again, I appreciate when you guys send me questions and, what are my thoughts? And it's just, I obviously give you what I think and what I've seen, but just look at all of these people down here, who lost money on this ride down, or everybody who got long at $30 a share, $25 a share, $24 a share, and we're still trading at 50% discount, right? So is this a buy with the huge rally in banks? I don't think so. I would love to see this be a short. And so what I would look for is for us to push up to the fib of 50 and do a retracement. And I think that's where you can make your money. If you want to go long on this, wait for it to get above the 50, okay, 1478, and ride it up to $17. If we get above 17, I think you could ride it up to 20. But this one, I would definitely not be doing equity with. I would definitely be playing this one with the options. And the reason is when SOFI is hot, it's hot. And when it's not, it's not. It will drop, and it drops fast. But you can see where my overall support was even here on October 29th at 983. So that was kind of your buy signal to go higher. So with that, hopefully you found something enlightening about the technicals today, and it should be a good week to trade. I will remind you that as soon as Thanksgiving gets here, and you're going to see this with a lot of the fund managers, is they're going to take off for the rest of the year. So the gains are in. They've already made their money. Nobody's chasing the market up here. If anything, we're going to have a lot of selling into the end of the year, taking profits, recording our overall net gain on a 2024, sit in cash. You've been seeing that with Buffett. He's cashing in on everything. Bank of America, Apple. I mean, he's got the biggest hoard of cash right now, and he's not even buying back his own stock. So if he's not buying his own stock, he's telling you that the market is highly overvalued. Now, am I telling you to go sell everything? No, but I think it is a good time to take some money off the table if you got some good winners and be ready to redeploy capital as we get a pullback, because eventually you're going to get one. So greed and FOMO are two of the worst things that you could experience with investing as well as trading. So with that, everybody, I appreciate you listening today. And if you like this video, give it a thumbs up and tell somebody about it. And then my next masterclass is going to start in January. And then I'm definitely not doing one in February, and I'm not sure I'm going to do one in March. So I'm going to do far fewer next year, and I'm going to spend more time with the Discord community, and further education to all of my committed students. So with that, have a fantastic Sunday fun day, and I'll talk to you all soon. Take care.